Hi guys, today's September 8th, 2020, and looks like a rough morning on Wall Street as futures are falling hard, especially Nasdaq futures. And looks like people are taking money off the table from the hot tech stocks and putting them into the stocks that could benefit the reopen after the pandemic. Stocks like Disney and Ford, and these stocks are higher this morning, and the tech stocks are suffering again. And it's been a couple of days sell off Thursday and Friday, and now it's continuing, looks like. But those shoes, I mean, I expect a comeback from this because there's just too much money out there, and these stocks, the tech stocks, benefit a lot from the ongoing, shutdown, pretty much, and people working at home. And these stocks could be bought on this sell-off, on this weakness, in my opinion. So let's jump to SPY, ETF for S&P 500, and SPY is falling, like I said, as well as QQQ. QQQ is falling hard this morning, like down more than 3%, and looks like it's gonna continue. But like I said, it could be a buy on weakness scenario. So that's in my opinion. So S&P 500, and QQQ has been on a wild run recently, and it was inevitable that they would pull back a little bit. So not unexpected, but I think could be a buying opportunity again. Okay, so let's jump to corporate news. Let's start with GM. And GM reportedly takes 11% stake and $2 billion in equity in electric vehicle maker or truck maker Nikola. So Nikola's shares are higher this morning. Sorry. By like 25%, and good news obviously for Nikola, and I don't know how much of a good news this is for GM. I guess this is good news for GM as well, but obviously Nikola shares benefiting from this vote of confidence. Maybe it's not a bad opportunity to get into Nikola, but don't get in at the open because the open is going to be rough, and the shares may come down, GM or Nikola, actually. So staying with the electric vehicle theme, Tesla's shares are falling hard this morning after being after the company was passed over the addition to S&P 500 index, and I mean that was pretty much expected. I mean the run in Tesla shares was unsustainable, completely unsustainable. It was it ran like 65% in like a couple of months, or even less than a couple of months, and it was inevitable that shares would fall, and shares are falling. So I would wait for Tesla to come down a little bit more before I pick up shares of Tesla. Okay, NIO. NIO shares actually was started at buy at Deutsche Bank. This morning was price target of $24, and interesting scenario. But the NIO share is still down because everything else is down, like Nasdaq is down and all the tech is down. But could be like closer to $17, or if it dips under $17, could be an interesting buy for NIO for me. Very interesting buy. Okay, DocuSign. DocuSign is falling again hard this morning, and they've been falling for like second or third day already. After they reported 17 cents per share earnings, more than doubling 8 cents a share estimates. Revenue also beat, and they issued upbeat full year guidance, but the shares came in very hot into this report, and I mean they were trading at $290, and now pre-market they're opening at $205. I mean the shares were just too hot, and that's why they were falling for a couple of days. But now they're approaching the territory, like if it dips under 200, I would just buy it with both hands. So I would just grab it with both hands. AVGO. And Broadcom. Okay, Broadcom came in, also had earnings last week, came in 16 cents above estimates. Revenue was slightly above, issued better than expected current quarter outlook, and anticipates strong demand for its data center chips and 5G phone launches and by Samsung and Apple. And shares are also trading a little bit too high for me to get in right now. I mean, but I would use this opportunity to get into Broadcom if it falls too much until like in low 340s. I would be interested in Broadcom. Okay, SWBI. SWBI, Smith & Wesson, personally my favorite, reported earnings of 97 cents, more than doubling the 48 cents estimate. Revenue was well above. Also declared a dividend of 5 cents, and I mean, very strong demand for its products, and that was expected pretty much, but even better than expected to me, actually. And I think the shares should be grabbed with both hands because the earnings were spectacular, in my opinion, and they also declared dividend. And the sales, I mean, they provided a pretty good outlook, and I think the good times will continue for Smith & Wesson for a while. Okay, Lululemon was downgraded by Citi to neutral from buy, but the Citi also raised its price target to $400 from $340. But the downgrade came because of the concerns of the valuation of the stock. So pretty much valuation was unsustainable, trading close to $400, and shares are trading right now at $350 pre-market, and I would let Lulu fall closer to like 330 before I buy it. Okay, Michaels. So Michaels said to hire more than 16,000 employees for the holiday season, and pretty strong run for Michaels shares in the last few months. But I think the sell-off provides the opportunity to get into the stock, and shares a little bit lower this morning, but closer to $10. I think Michaels is a pretty strong buy, in my opinion. COO. Okay, so Cooper is a medical device maker. A reported profit of $228, beating $1.52 consensus estimate, gave upbeat current quarter estimate. That's a very good medical device maker, and shares were trading higher, and I think will continue to go higher actually. But I would wait for this sell-off to work itself and buy shares on a pullback only. COO. Okay, Peloton. So Peloton said it's cutting the price of its core exercise bike by 24% and adding cheaper treadmill. CEO also said that the company was able to cut down on order delays. So shares of Peloton were trading higher pre-market, but now it's coming down with the rest of the stocks especially on Nasdaq, and I would wait for Peloton to come in a little bit before I buy it, especially on this sell-off. But it's a very interesting buy. They're reporting earnings on Thursday, I believe, and it could be a good opportunity to get into using this sell-off before the earnings. Beyond Meat. Oops. Okay, so Beyond Meat shares actually trading a little bit lower, but they were higher this morning. They reported that they signed a deal to open new production facility near Shanghai, and also Starbucks said that it's adding plant-based items to menus across Asia, including offerings from Beyond Meat and Impossible Foods, and also others. But shares of Beyond Meat has fallen since I believe since June, when it was trading like around $170, and right now it's a more reasonable valuation for Beyond Meat, and could be an interesting spec if it comes down closer to $120 or even below $120. Could be an interesting spec to buy at this point. And like I said, Starbucks is a little bit lower this morning as well, and I think closer to $80 for Starbucks is a buy for me. Okay, Boeing. Okay, Boeing is falling this morning after the report that FAA said it's investigating manufacturing flaws affecting certain Boeing 787 jets. I believe they're investigating Dreamliners, and they also said the issues can potentially stretch back almost a decade. But we'll see what happens. I mean, Boeing was voluntarily reported some of the problems, and this could be an interesting buying opportunity for Boeing. But I would like to force the shares to fall lower than $166 where it's opening pre-market. I would like to buy closer to $160 for Boeing. Okay, Roku. Okay, so Roku shares are also lower as everything else, but it was rated overweight at Wells Fargo in new coverage, which calls Roku advertising heavyweight in a new making. Okay, so Roku is pretty much cornered the market in their market area, and shares are coming down a little bit. It could be again a good opportunity to get in. Closer to $150 could be a good opportunity in Roku. Okay, and Foot Locker, FL. Foot Locker is trading pretty much flat this morning pre-market after Goldman Sachs rates Foot Locker as a buy in a new coverage, noting strong product cycle and improvement in digital sales. And if you remember, Foot Locker showed very strong earnings recently, and I think the trend will continue. And shares of Foot Locker could be a very good buy, in my opinion, especially on a sell-off. And finally, shares of Ciena. Okay, Ciena is falling again this morning, and it's been falling for a couple of days before that. And they reported very good earnings, actually beat on top and bottom, but said that the COVID-related market dynamics resulted in order slowdown and may affect company revenue in the next few quarters. This could be used as a buying opportunity because shares of Ciena are trading in oversold territory right now, and if it comes down on this sell-off, this could be closer to $40. Could be a very good buy, actually very interesting buy for me for Ciena, because just recently Ciena was trading at like $60 and now it's trading at $40. So you're getting Ciena at a huge discount, even though they said that they will be affected by the COVID issues in the next few quarters. Could be a great opportunity to get into the stock. Okay, that's it, guys. Don't forget to subscribe to my channel and click the like button, and I'll see you Thursday.